Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500 on a 4-hour chart, and the wave count that we've been following is is on track, and the corrective pattern, the A, the B and the C here that we've been following is in place now, and in the C wave we've been looking at a 5-wave structure to the downside here. That seems to be complete now, and we'll be looking for the further upside. So on Friday we were just looking for a little bit more of a push down through here. So look, realistically we need to confirm any upside here, because once this wave C here is finished, we should be seeing new highs above these highs here. However, what we like to see now is some confirmation in terms of the wave structure coming up through here, and also some price points to work off. So we just drill in there a little bit, and this is it here. So this is what we just clean this up here. This is what we were expecting to unfold. We were looking at this little move down through here to complete. Now, the 144 here is quite an important number, well, as you can see through here as well. In sort of technical terms, it's where Gann and Elliott also meet as well. This is probably the only number they agree on, but as mentioned before, their retracements and extensions and so forth are very close to one another as well. So look, we just really want that 144 as support, not as resistance. So, and if you were up early enough, then the retest of the 130 here would play out. This is just drilling down to the 15-minute chart here. Just this seeing 5 waves up through here, the 1, the 2, 3, 4, and 5 here as an impulse wave, pretty much assures us that after a corrective pattern we'd see another 5 waves up, and that's occurring, so that's good. But what I do need to say is that this 5, 3, and 5 structure that's occurring here would be a corrective pattern, because it's in a larger 3 wave. So what we actually want to see is 5 waves going up in terms of the 1, the 2, the 3, the 4, and the 5. That would 5 waves there would give us another ABC correction, and then another 5 waves up above that as well. Well, it would actually give us much more than that. So it's just one step at a time. But just pointing out that even though that we've got the ABC pattern completed, at this point here, we still only have 3 waves up through here, so that it can be corrective. So that's why it's important to have the 144 as support there. This retest in here, if you're lucky enough to get that, well then that's fine, but next step is to really sort of wait for the 144 here, unless a pattern in here develops that you can work from within there. And that's the same with the Dow Jones. Just depends on what market that you look at. The S&P 500 is probably more of a professional way to look at it, because it's just a broader market as such. But once again, the A, the B and the C wave down through to here, creating that low in here. So we're looking for a bounce off the 1330, 13300 rather, or the 12772. So if just to sort of spark your memory off a little bit, this move down through here. Now on the futures market here, this has created a high here above this here. So even though we're counting this as an A and a B and a C here for wave 4, we also have to be mindful that this high here was the high. So we also have to look at this as a 5-wave structure to the downside, as an impulse wave to the downside. Then we would have a corrective wave to the upside in terms of an A and a B and a C wave up in 3 waves. So that's why I'm mindful of what we're actually looking at through here. Of course, in the bigger picture here, the 13,500, the 500 is really the line in the sand up there, as you can see. So you can just imagine if support was found on this, then the bias would be definitely to the upside. Of course, we want to be able to get it a little bit closer than that. So looking back in, drilling down into this somewhat here, we've got the same little 5-wave structure moving to the upside here for wave 1 and back for wave 2, but as I mentioned, that can be an A wave and a B wave and a C wave up through here. This move down through here is in 3 waves, so that's corrective as well, so we should see some upside for that. And this is also working across 13,400 here, so it's fine for this market to come down into the group 2 area here, the 13,372 and 880 here. So just allow that to play out through here, and then we should see some further upside from that point there. Right, the European markets are pretty much, they're slightly different, of course, but they're in their own little way here. And we just mentioned before that this is the FTSE here, the 5,800 here is really the balance point within this pattern, and the trading range started from here to here, and then it's getting smaller and then smaller and smaller and smaller. So now it's really locked in with group 1 above and group 2 below through here. So the bias is to the upside because of the price has come down and retested it here, but the safest long trade would be having, as always, the top of group 1, in this case subgroup 1, as support. So you need support on top of that. If the 72 here, the 5772, became the resistance here, retested resistance, then that would create a short trade from that way. So the price is actually sort of sticking to the 5.8, so that within itself is a positive sign when we see this occurring through here. So it's a positive sign, but yeah, we just need a little bit more for that as well. Can I have a look in here? Okay, this is this is the FTSE on 10-minute chart. We do have the same as the other markets, as the Dow and the S&P 500 in terms of 5 waves up and a corrective wave back. This hasn't moved as high as the Dow Jones has done, but look, support on the 5820 here. That's the pivot within group 1, the 10, the 20, and the 30 here. So we could work off that there, that 20 there. Such. Now, the DAX is the same as well. The DAX. We've been looking at its, A and B and C correction to the downside here, this 3-wave structure through here. We're following all of that, and the lows come in. In fact, the low for this came in much further earlier than the US indices, so it actually gave us a lead into what was actually going on as well. So in this case, we've counted this up for wave 1 here, and we've got this wave 2 coming back as we are looking for the 61.8 retracement level, which is close enough to the 72 here, and seeing a push up through here now as well. So obviously the 73 here is where the supply really starts to set in here, the sellers rather, and yeah, we need that 73 as support, and that would create some long side potential to the upside there. But sort of drilling in here as well, this number here would become very important, the 7272. It needs to be tested again and so forth, but on an intraday level, have a look at that, and once you're sure that that's been tested and fine, the other numbers around that are around the 72 are the 65 and the 80, so you, as subgroup 2, and you can use those as well. So you can build a trade in on top of the 272 and also the 72 and the 80, but just give it well into next session to really sort of find its feet on those numbers there. The Australian market, we'll just have a look at the bigger picture here. This is the end of day chart here. What we want to point out here is that the 4,500 is a minor trading level. 5 is the second strongest number, so we can always expect a reasonable size correction to come from the number 5. As you can see so far, I see this as a classic pattern across the levels. Normally I would see this as what I call the classic trading levels pattern: the arrival, the reaction, finding support, then creating the first high above the level as such. So we'd see the first high above the level like that, and then we would see a larger correction here, an ABC correction across here, coming probably back down that far is plausible. This, and then another move to the upside there. So we just pointing out that we can see a bigger correction across here. the way that I normally deal with that is that on top of the 4-5 here, we can look at going long within here as we have been, but we'll look at that in a moment. But it's up here at Group 1 here, so the 10, the 20, and the 30. If the 30 becomes, if this market just pushed straight up through here and found support on the 30 there, then we would understand that would be going to the midpoint, the 45.50 at that stage. So there'll be a positive sign. So it's not that we missed the boat. We can get it, but it has to be on top of the 45.30 there. So with that in mind, as a general sort of picture, when we look at the Australian market as such, we were also looking at the arrival through here, the A, the B, and the C correction down through here. So now we're seeing the first high being played out through here. Now we've labelled this as wave 1 here and wave 2 here, and a wave 3 to go up here, and a 4 and a 5. But I'm very, very mindful that 5 is the second strongest number in the market, and the market is really going to, stick to that. It's where the large orders are going to gravitate to. And it's the job of Group 1 here, the 10, the 20, and the 30, to hold the price to the closest, largest number, as is it for Group 2 under the level here, the 65.72 and the 80 here, to hold it to this level here. So there's never really, a great trading situation in, while Group 2 is doing its job holding it to the closest largest number, and Group 1 here, Subgroup 1, holding it, forcing it down to the 4,500 here. There's never really any good trading that goes on through here. In terms of intraday trading, the market always moves the quickest between from the 8 down to the 5. And then if the 5, and that's both ways, and the 5 down to the 3 here, if the 50, the midpoint becomes the resistance here. So markets tend to travel quite quickly between 3 and 5 up and down, and 5 and 8 up and down, but very slowly between 1, 2, and 3 here, because it's just where the larger orders sit. So it's still going to be a bit of a struggle here, but in terms of trading stock, well, of course, it does create a positive bias simply being above that. Let's have a look at commodities. They were quite steady overnight, and the US dollar will be the pivot within all of that. Okay, just quickly here with the US dollar. As you know, the 80 is the line in the sand. We're looking at this whole correction moving up here as being a corrective rally. Once it's complete, we'll see further downside. And we may have that now in terms of from the top here, this move down through here and the failed retest of this point here. But we do want this Group 2 here, as mentioned before in the ASX market there. The Group 2 job is to hold the price to the closest largest number. So we need a failure at this point here. And in fact, within the Group 2 here, the 72 is the important number here. We need that as a retested resistance. If that is the case, and that gets the resistance here, and it starts moving down, well, then the commodities can start moving up. And we think that would be the case. Gold can have a bit further to the downside. So base metals seem to be a bit steady. We'll have a look at copper based on that. But this is what we need to and this is the same for the indices and the currencies as well. That 79.72 as resistance would push the other markets to the upside. So it's getting close. We'll just need to give it a little bit more time to see what occurs in this little area here, another sort of session. So the copper market, quite central to the base metals, as copper's used in many objects as such. So look, basically, like gold, this particular pattern is like gold here. We're looking at this as an impulse wave to the upside in terms of the 1, the 2, and further up for the third wave up there. And inside the third wave going up there, there'll be 5 waves, and that's what we're looking for through here, which is still hasn't completed either just yet. So we're at wave 4 here. Yes, I do understand the flip side of this, and the flip side is that this market so far, this move up here, is in 3 waves. We can label this an A and a B and a C wave through to here. So that's possible as well, and see further downside, but that's not our bias at the moment. But it's been pointed out to me, and I'm aware of that. But we'll just stay with what we've got so far in terms of this pattern through here at the 80 here, which is it's a profit-taking number. It's just simply the first even number before the next whole number in all cases. So it could be, it could be 8 anywhere you see an 8, but that's why we call it a profit-taking number. So look, the A, the B, and the C pulling back for wave 4 at 38.2% retracement level. If we drill in there a little bit, we can see the A, the B, and the C wave through here. The C wave should be in 5 waves: the 1, the 2, the 3, the 4, and the 5. A little bit high for this wave 4 here, so that does bother me somewhat. But like we just mentioned in stocks, in the Dow and the S&P 500, we could have that low in place there now. But once again, we need confirmation. Confirmation would be in the wave structure coming up through here as an impulse wave. Or we could look at the 72, the 372, as being a bit of a balance line through here, so that as support would be a good thing to have. This is all sort of group 2 as well, the 65, 72, and the 80 through here, and it's holding the price well as a corrective pattern, as it does and should, and so forth. So now we need to see, now that that's completing through here, that will be looking for support there, and that's quite critical, because that will give if, the big if that does become support, then the materials sectors, BHP and Rio and so on, would be positive to the upside. So, we'd be looking, BHP, for instance, on the local market, if you put a line across 34, the Fibonacci number 34 there, you'll see that's really the support and the resistance within the market there. So 34 as support would be the place to build a stronger trade from, but you could build it in earlier than that if this became the support there as well. Just sort of drilling into that little corrective pattern there. This is how we've been looking at it. As you know, the A wave, the B wave in 3 waves there, and the 5 waves for the C wave here, which would be the wave 1, wave 2, and then the third wave coming down here has got 5 waves in it. So we've been, as you know, we've been counting down through here. The third wave is good. Wave 3 is normally the longest and the strongest in the markets, but in commodities, the 5th wave can normally have the extension in it, like we're experiencing that with gold at the moment. But anyway, in A, B, C here for the 4th wave and the 5th wave here. But this 4th wave here moved a little bit high, moving into the price territory of wave 1 here, which is breaking an Elliott rule. But because we're dealing in derivatives here, the leverage, you can see that happen quite a lot, and more so in currencies. Right, and wave 5 come down here. So we can see that this move up through here could be just corrective and unfinished at this stage as well. So it appears to be corrective. If it breaks this here, then obviously we need to look at the 350 down through here. So when we look at base metals, precious metals, you see that this is still got further to come down through here. So this is the gold here. This is, if I can just go back to a larger picture here, as such, you can see that this is the same pattern as the copper that we're just looking at here, pretty much identical. So we're just looking for that wave 4 there through here, and we're just working through that as an A and a B and a C coming down through here. So just looking at that a bit more closely here. This C wave that's coming down through here, it does seem to have more to unfold here, and that's why I was a bit sort of concerned about the copper market. In terms that we've got wave 1 down to here, which would be 5 small waves in here. It's wave 1 and wave 2, and that's too small to be a third wave in here, so that's got to be wave 1 of the next degree smaller. So from wave 2 here down to wave 3 here, there'll be 5 waves in that, so we would be looking at down for 1 and back for 2. The third wave in here is got 5 waves in it, so that's the little third there, but we'll still be looking for a little 4th in here and a 5th to make the third here, then a 4th and then a 5th down. So there still seems to be more room here to move to the downside for gold. Look, if the midpoint here finds support and decides to follow indices, and if they move to the upside, then you would base the trade off that point. But otherwise, expect it to move down closer to the 1700 here. It will, as normal, bounce around in group 1 here, the bounce off the 30, run out of steam as it hits the 40 and the supply in this little area through here, and then make its way down through here. This is the strongest part of the wave structure, so the series of waves 4s and 5s in this area here will be very sort of much like this choppy pattern through here as it moves through here. So be very careful about that. Trading in group 1 to the downside is not such a smart move. You need to, if you're going to do it, then give it room to move and edge down, because it will bounce between these levels, these sub-levels through here. The oil market. Let me just see what I've got here. Okay, we've been working with this pattern here. So the way that we had this coming down as an A and a B and a C and completed here. Okay, so then we've just been watching it unfold from this point here, and we just took the pathway that this market is working with 90. That's pretty obvious. And as always, the group 1 above is holding the price to the closest largest number. This is minor group 1, not subgroup 1 that we're talking about before, but still a group 1 of 1, 2, and 3 here. And below the first minor level below is 88. So you can see that the price is working with 90, but group 1 is holding it to here, and group 2 or 80 is holding it to here. Now, this move up through here can be counted as an A wave, a B wave, and a C wave to here as a corrective wave, and we'd see more downside come through there. That's possible. It's also possible to count this up as wave 1 and back for wave 2, which would be in line with the European indices, and then this would be up for 1 here of the next smaller degree with an A and a B and a C coming back through here. So it's retesting 90. So it's really finding it as even though the pattern can be both ways here, it can be a positive pattern or it can be a negative pattern. What we are seeing here is that the price is above 90, so that gives it a positive bias. It's retested here now, and checked it for support, which is also another positive thing. The move up here on the 4-hour chart would be in line with the indices moving up. So we know that it's moving with stock at the moment. So that would be a positive thing as well. So it is being positive. Of course, if it finds support on the 30 there, then that's a long trade from that point there. You need to navigate the midpoint because there will be corrective patterns there. But where to enter through here, if we just drill in through that a little bit further through here, we can see that this move through here, the retest down here, is in a corrective pattern because it's in 3 waves. Okay, that's the main point here. So we could say that this is the supply here where most of the volume was turned over. So if the 92 became the support, then you could build the first small trade in from that. And then if the 93 became support, you build it in from on top of that point there as well. You would take part profit at 95 when arriving, and then just wait for it to become support and then move back in through that way. Alrighty, let's have a look at the euro and the Australian dollar and the US dollar. Okay, so for the US dollar here, basically we're just looking for the wave 4 here. That's what we've been doing all through here. And it certainly could be complete now in terms of this A, B, and C here for the A wave, the A, the B, and the C for the B wave, and 5 waves up for the C wave here, if we include this as the top wave here, which is possible. So then we'd be looking for 5 waves down through here, 3 waves back up through here, and then we'll be looking for the next 5 waves down through here. So that's what we're looking for. Of course, if we're correct, then any movement down through here would see the upside in the indices, the other currencies, and the commodities as well, of course. If, however, we're wrong and this wave 4 is not done and dusted, then support on the 80 there would create a positive bias here, and that means it would have to be net short in CFDs and stock as such. So just drilling into this little section here a little bit. This is on the 20-minute chart here, and what we're looking for here, if we're looking to the downside, we're looking for this 1, 2, 3, 4, 5 down through to here. As you know, then we're looking for an A and a B and a C coming back up through here, retesting 80, and then we'd be looking for the same pattern down again. So the 1, the 2, 3, 4, and 5 here, and then the A, the B, and the C here, and then we'll be looking further to the downside. Now, the trigger for this, I'd imagine, would be the 79.72 there as a retested resistance. So this that moved down through here, just trading through there is not enough. We don't trade the breakout, we trade the retest, the failed retest, and then it's proof to you that it's going down. I mean, that's a breakdown through here, but it's come back up and it's moved back up there. So it hadn't failed as such, you know what I mean? So it is a tricky thing to get hold of, and the best way to deal with that when you're learning about it is just to trade the most smallest amount you can and build in the trade. So in building in a trade through here, you know, you could get in early through here because it's done this retest here, and that's been in 3 waves up there, that's in 3 waves. So these highs here, the market should stay below that. But you want that 72 as resistance. If that's the case, then you would add to that, and then you would use the 65 to add to. But you want that as resistance as well. There's going to be a bounce off the 50 there, so you can cover at the 50. Watch, see how much steam it's got in it. If it runs out of steam, then look to build back into the trade there, and then also look to add under the 50 as well when it becomes the resistance. And of course, it's going to bounce off the 30. So you need to cover in part or all at 30, depending on what you're doing there. As I mentioned before, trading between 5 and 3, but both this way, is quite fast. And that's what you'd be sort of looking for there. But anyway, it's a good little... whatever you're trading in the markets, understanding this as resistance is a key point. So looking at the euro to the upside here, we're looking for the wave 3 moving up through here, then the A, the B, and the C here. This can also be a triangle here, because triangles occur in wave 4s. So an A and a B and a C and a D and an E here. But as you can see here, there's a couple of things going on. First of all, the 130, the top of minor group 1, is the resistance at the moment. So if that ever became the support, then that would give it a positive bias, wouldn't it? Because you'd be trading on the right side of the closest largest number. And yeah, so let's just drill in here and see where we are with this here. So in terms of a simple ABC from the top of wave 3, we've got the A wave down, the B wave back up, 61.8% roughly to the B wave, and then the C wave moving down in 5 waves here. So that's fine. And then we're looking at 5 waves moving up through here. So we've got an impulse wave now moving to the upside. We were looking at an ABC coming back into the 129 area here the last time we spoke. And then we're looking for a move further to the upside there. So it would be really important if that, if the US dollar finds the 79.72 as resistance, because then that would give it sort of clearance for this to move up. And really, as I mentioned, the 130 here is the closest largest number, and you need that as support to have the safest trade. So just drilling down into that on the 15-minute chart through here, we were looking at the move up from this low here the other day. So we'll count the 1, the 2, the 3, the 4, and the little 5 waves for the 5 make wave 1. The ABC coming back nicely into the 129 area. And then it does appear that we've got a 5-wave structure to the upside here for a smaller wave 1 here, and a wave 2 coming back. This wave 2 may not be completed through here because it does appear to be a little 5 waves down there, but I haven't really pulled that apart. But if it does come, but in terms of trading, then the midpoint here is the most important number. It's the 129.50. So that as support, so if the market's got to push up through that, then come back and sit on it. If that's the case and then starts moving up again, then you want to grab it after the retest. Of course, you can buy contracts at each different number all the way through everywhere. So there's different ways of trading. It's good to use at least 3 contracts, because that way you can take a profit with one of the contracts and leave the other ones there. It gives you a bit more flexibility. Just using one can be a bit limiting. So it's also quite flexible having orders, many other orders at different numbers as well, because then you can build in and you can unwind them as well. But look, anyway, support on the midpoint here, the 129.50 it would create the upside. And then, of course, the subgroup 2 here, so you can look to add on top of the 72 through here. Then when you get to the 30 here, it's going to be the subgroup 1 here. It's its job to hold the price to the closest largest number. So it's going to it's going to be choppy price action through there, so just be careful of that. That was the resistance here. Once this moves up through here, if it does, then obviously that's going to be subgroup 2 will be the support area through there. So the euro should follow the S&P 500. So with the S&P 500, we've only got 3 waves up. We need those 5 waves up. We need the S&P 500 to find support on the 144. If it doesn't do that, well, then it's softer, and the euro will work with the S&P 500. So there's a few markers there to look at. The Australian market, the Australian dollar here, a couple of things here, a couple of wave structures. So we can have this down here. It's in 3 waves coming down through here. So it can be the A wave, or it can possibly be the E wave here of the larger triangle finish. So of wave 4, so that could actually be there as such, and that could be there. That's a possibility from there. We would need to see that move up from that point. If that's not the case, then we see this continue its little path further down through here, and this little move here would be the B wave through here, which would be complete. B wave could go to there, and then we'd see a move down further through here. So there's 2 ways to count that. So in terms of trading, then it's better to use the price. So just drilling in here for a moment. The long trade would be created with the 102.72 being the support. As its resistance at the moment, it gives it a bearish bias. That said, the 102 here is a nice support. This move up here can be counted both ways as well, as corrective or impulsive as well. So I don't think that we should really sort of concern ourselves with the actual Elliott pattern in this particular case, because it's a bit iffy. So we need support and resistance through here. So first of all, we've got the 102 as support, which is good. We know we've got the 102.72 as resistance. So that leaves us working within this little environment here. So just drilling into that here, the move up through here appears to be reasonably positive at this stage, and we were tracking all that down through here. Won't go into that. But trading for today, that the midpoint here, the 102.50 as support, would create the long trade. So that's what you'd be working with. So in your view, you need to work out what would be support here and what wouldn't. This particular move down through here is in 3 waves, and that's really one of the best things to this A, B, C is one of the best things to know about using Elliott, because if that is an A, B, C here, that means that top will be taken out. And that's just a simple 3-wave swing that you can really sort of pick out a corrective pattern. So then, you know that it's like this one here. It's like this is in 3 waves here. So, you don't know it's 3 waves until this pushes up through here somewhere. So, you'd be above the group 1 here as such. So you could use 102.33 here, but because it's got that 3-wave pattern, that high is going to be taken out. So that is good news, and that's the same for all of these trends moving up through here. So that's So anyway, support on the 102.50 creates the long trade, and that's a real possibility because of this 3-wave pattern through here as well. If you break that down onto a 2-minute chart rather than 10-minute chart, you'll get a really good feel for that. All right, well, everything's pretty much on track. We're sort of looking to the upside with stock. We've been sort of edging that way, and we've been waiting for the indices to have in the US and Europe to have their sort of lows in place. They are in place. We don't have confirmation of the moves to the upside being impulsive just yet. They can be impulsive or corrective. The bias is for them to be impulsive. But that said, Elliott gives us directions, but we use the trading levels to trade, and we use money management to make a success of things. Alrighty, well, good morning and good luck.